for an emerging economy like Nigeria, a thriving capital market plays a vital role in strengthening the economy, since it signals the relocation of assets among different economic units within an economy. But despite the compounding damage from the COVID-19 pandemic and the Russian-Ukraine war, which has slowed down the global economy, Nigeria's capital market activities ended positively in the first half, Q1 of 2022, as both local and foreign investors of the Nigerian Exchange Limited gained about 3 trillion naira. Against this backdrop, the market has lost 2.35 trillion naira in the last 3 months, from 29.157 trillion naira in May 27, 2022 to 26,801 trillion naira in August 17, 2022, representing, of course, a drop of 8.79%. Joining me live here in our studios to discuss this and more on the development is the financial analyst and stockbroker, Mr. Rotimi Fakayejo. He joins me live. Thank you so much, Mr. Rotimi, for coming on Business Nigeria.
Good afternoon.
Yeah. So this let's get things started first of all with the growth that we recorded in the second quarter of our gross domestic product. Just how does this growth impact the Nigerian market?
If you look at it basically, vis-a-vis the performance of representative companies on the Nigerian exchange, you will see that there's been quite a good performance coming from a good number of them, especially the blue chip companies. We have the likes of Cadbury, which we saw was not really doing well before, but now is doing much better, declaring profit and paying dividend. The likes of Unilever, the consumables, and also those in the oil and gas sector, except not a very few of them that has not really impacted the market. But I think basically, when you look at it globally, nationally, concerning the Nigerian economy, feeling the pulse of Nigerians, the growth recorded may not really have impacted. But when you look at other indices, then you begin to wonder what actually is happening, especially in the Nigerian equity market. We've seen quite a good growth over the period. And
it's the 7th consecutive growth.
Yes. The year-to-date all-share index is about 16.8%, which is quite substantial for a time like this. And also, like I said earlier, the performance of the various quoted companies on the exchange, those ones too are in the superlative. And so is a whole lot of confusion that how are the lives of the people impacted, then how are the what voice are we hearing from the economic indices? So it's quite appalling the way it is. But for the equity market, I believe it has really been positively impacted.
I wonder if your position will change about the nation's capital markets when we also consider the inflation rate, which is just above 19%, and a very poor exchange rate between the Naira and the dollar. Would that change your position?
We've really seen the impact of this over time. One of the major effects or consequences of the continuous drop in the value of the Naira is the capital flight resulting from foreign portfolio investors' investment in Nigeria. We've not seen much of their participation in the last 1.5 years or 2 years since the COVID period. And that has largely positively affected the market in the sense that we used to experience a lot of volatility with respect to foreign portfolio investors' participation in the market. But for now, that participation has reduced substantially. And so we are not seeing much effect. The ratio of foreign portfolio investors to local investors is about 2022 to 80-78. So what that means is that we have more of local participation. So the Naira effect is not really impacting as it would have been if we had as many foreign portfolio investors participating in the market for now. But for the inflation, we have seen that in the liquidity position of the market. People are not able to save as much as they could. People are fighting for survival. So we have seen a reduced participation in the equity market since maybe in the last 2 quarters. And for that, in the last quarter. So for that reason, we are not really seeing the participation has reduced, liquidity is low, but at the same time, we are not seeing a sell-off from investors. So if you want to sum that up with respect to the performance of the index, you can still say the performance is still very much okay.
I wonder what data we have around the depressing market activities we are experiencing at this time. And are you positive? Are you optimistic about markets, especially as we run into the second half of the year, especially with the 2023 elections just around the corner?
Well, I think for last month, for the month of July, the market went down. For this month, the market is closing down by about 1.3%. And for the consecutive months prior to the election, we are going to see further erosion of value in the equity market. And that will go a long way with respect to activities that prelude the election. If we are seeing some sanity and serenity within the system, then definitely the market may not go down as much. But if the system is heated up, then we're going to see the index really, really going bad. But for now, I think we can still parry what we are seeing presently. But I'm not optimistic that the market is going to continually go up, because there is really nothing to stimulate such upward movement. So what the point I'm trying to make is we're going to see a gradual decrease or degradation of the market. But definitely, after all of this, the market will come back on its feet again.
All right. Just before my colleague joins us here, Efenga Cobb, let's look at the earning powers of some of these companies in some sectors, banks, oil companies, insurance, and of course, manufacturing companies. I wonder what you would describe their performances are as, in very recent times.
Yes, like I did say that earlier, that the performances of most blue chip stocks, either in the oil and gas, either in banking or in manufacturing, we've seen a very, very good performance coming from them all. Guinness is doing well. Nigerian breweries recorded a better performance and in the half year compared to the same period last year. We've seen the results of Zenith Bank. We've seen the results of other quoted companies, and the performance is quite attractive. So what that implies is that irrespective of what we are seeing presently, the market is still thriving because the fundamentals are still very much right. So there's really no cause for alarm for investors to really panic at this time. Even if elections do force prices to come down, then definitely after the election, we see a situation whereby things will stabilize again.